Based on the historical data and forecast, Bitcoin has shown significant volatility. The price has fluctuated between a support of $106,700 and a resistance of $117,400. The RSI indicates that the asset is currently approaching oversold conditions, with a reading of 48.9 on August 4, 2025. The Bollinger Bands show that the price is nearing the lower band, suggesting a potential bounce. Considering these factors, I propose a moderately bullish strategy. We will implement a combined strategy using RSI, Bollinger Bands, and support/resistance levels to maximize returns. The entry price will be $115,400 on August 5, 2025, when the forecast price is $115,900. This aligns with the lower Bollinger Band and the recent RSI reading. The stop loss will be set at $113,200, slightly below the recent low and providing a buffer against unexpected drops. The target price will be $116,300, coinciding with the center of the Bollinger Bands and a reasonable profit target given the current market conditions. This strategy aims to capitalize on a potential bounce from the oversold region, while carefully managing risk with a well-defined stop loss. The combined approach of RSI, Bollinger Bands, and support/resistance levels provides a robust framework for this investment decision. Based on the historical data and forecast, Ethereum has shown volatility with a recent upward trend, but the RSI reaching 86.0 indicates an overbought condition. The forecast for the next week suggests a potential downward correction. Considering this, I propose a short-term contrarian strategy. We will initiate a short position at $3,680. The stop loss will be set at $3,690 to protect against a potential rebound. The initial target price is $3,600, aiming to capitalize on the anticipated downward correction. If the price breaks through $3,600 and continues to decline, we can adjust the target price to $3,550. To refine this strategy, we will incorporate the Bollinger Bands. The center band is currently at $3,650, and the upper band is at $3,940. If the price touches the upper band, it reinforces the overbought signal. The lower band provides a dynamic support level. If the price falls below the lower band, it could indicate a stronger downward trend, prompting us to lower the stop loss to $3,640. This combined approach, leveraging RSI and Bollinger Bands, aims to maximize potential returns while managing risk effectively. Based on the historical data and forecast, XRP has shown a decreasing trend. The RSI has been fluctuating, with recent values indicating oversold conditions, particularly around 41.7 and 49.0. The Bollinger Bands suggest that the price has been approaching the lower band, indicating a potential rebound. Considering these factors, I recommend a long position strategy. We will enter a long position when the price reaches $2.96. The stop loss will be set at $2.79, just below the established support price. The initial target price will be $3.12, near the recent resistance level. To refine the strategy, we'll incorporate the RSI and Bollinger Bands. If the RSI moves above 50 and the price touches the center of the Bollinger Bands, we will adjust the target price to $3.15. If the RSI reaches 80, or the price reaches the upper Bollinger Band, we will consider taking profits and exiting the position. This layered approach aims to maximize returns while mitigating risk, capitalizing on potential rebounds and trend reversals while protecting against further downside. Based on the historical data and forecast, BNB shows a recent trend of volatility with periods of overbought conditions. The RSI consistently exceeded 80, indicating an overbought state for a significant portion of the period, particularly between July 22 and August 4. The forecast data suggests a potential pullback, with prices hovering around $760 to $774. Considering the overbought conditions and the potential for a short-term correction, I recommend a short-term short position. We will enter a short position at $773. The stop loss will be set at $786 to protect against a potential upward reversal. The target price will be $759, aiming to capitalize on the predicted pullback. To refine this strategy, we'll incorporate Bollinger Bands. The price has been consistently above the upper Bollinger Band, further reinforcing the overbought condition. The center band is trending upward, but the upper band has shown some contraction recently, suggesting potential volatility. We will use a combination of RSI and Bollinger Bands to confirm the short entry. If the price breaks below the lower Bollinger Band while RSI is below 50, we will consider entering a long position. This combined approach offers a more robust risk management framework. The portfolio will prioritize the short strategy initially, with a potential shift to a long position based on Bollinger Band signals. Based on the historical data and forecast, Solana shows a clear downtrend. The RSI consistently dipped below 50, reaching as low as 39.6, indicating oversold conditions. The forecast for the next week projects a continued decline, with prices ranging from $172 to $160. Considering the support price of $164 and the recent price action, I recommend a short selling strategy. Enter a short position at $169, placing a stop loss at $172 to limit potential losses. The initial target price is $160, aiming to capitalize on the downward momentum. To refine this strategy, we'll incorporate Bollinger Bands. The price is currently near the middle band, suggesting a potential bounce. However, the overall trend remains bearish. Therefore, if the price breaks below $162, which is the lower Bollinger Band for the forecast period, tighten the stop loss to $164 and adjust the target price to $158. This combined approach leverages both momentum, RSI, and volatility, Bollinger Bands, for a more robust and adaptable investment approach. The combined strategy provides a calculated risk-reward profile, aiming for high returns while mitigating potential losses. Based on the historical data and forecast, Dogecoin shows a downtrend with high volatility. The RSI consistently exceeded 80 in the recent past, indicating an overbought condition, while the forecast data suggests a slight recovery but remains within a narrow range. The support price is consistently at $0.201, and the resistance price is around $0.22. Considering these factors, I recommend a short selling strategy with a focus on capitalizing on potential pullbacks. The entry price will be $0.217, placing the stop loss at $0.226 to protect against unexpected upward movements. The initial target price will be $0.201, aligning with the established support level. To refine this strategy, we'll incorporate Bollinger Bands. The price is currently near the upper band, further reinforcing the overbought signal. The strategy will be a hybrid approach combining RSI and Bollinger Bands. If the price breaks above $0.226, the position should be closed immediately. If the price reaches $0.201, consider taking partial profits and setting a trailing stop loss to capture further downward potential. The revised target price will be $0.192. This approach balances risk mitigation with the potential for substantial returns, leveraging the current market conditions for a profitable short position. Based on the historical data and forecast, TRON demonstrates an overall upward trend, consistently testing and slightly breaching the resistance level of $0.335. The RSI fluctuates between 59.1 and 76.3, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening, suggesting increasing volatility. Considering the RSI nearing overbought territory and the forecast projecting prices above $0.34, I recommend a long position. Entry price should be $0.335, with a stop loss set at $0.326, just below the support level. The initial target price is $0.345, aligning with the forecast high. To refine this strategy, we can incorporate the RSI and Bollinger Bands. When the RSI dips below 60, consider a partial entry at $0.32, setting a stop loss at $0.306 and a target price of $0.33. Conversely, when the price touches the upper Bollinger Band, which is around $0.335, a smaller position can be initiated with a stop loss at $0.33 and a target price of $0.34. The most efficient portfolio will involve a combination of these strategies, prioritizing the initial long position at $0.335 due to the overall upward trend and forecast data. Based on the historical data and forecast, Cardano shows a downtrend with significant volatility. The RSI has been consistently above 70 for a portion of the period, indicating overbought conditions, and has recently fallen to 43.0, suggesting a potential reversal. The Bollinger Bands confirm this volatility, with the price frequently touching both the upper and lower bands. Given these conditions, I recommend a short-term contrarian strategy focusing on potential rebounds. We will initiate a long position when the RSI reaches an oversold level of 20, specifically around $0.7. The stop loss will be set just below the support level at $0.688, and the initial target price will be the center of the Bollinger Bands at $0.754. To maximize potential returns and manage risk, we will implement a dynamic strategy. If the price reaches the initial target of $0.754, we will move the stop loss to the entry price of $0.7, securing profits and reducing risk. Furthermore, if the price continues to rise and breaks above the recent resistance of $0.763, we will set a second target price at $0.776, aligning with the forecast data. This approach allows us to capitalize on potential upward momentum while protecting against downside risk. The overall portfolio will be 60% long position, 20% cash, and 20% allocated to other cryptocurrencies for diversification. Based on the historical data and forecast, Stellar shows a downtrend with recent price fluctuations. The RSI consistently dips below 80, indicating it's not overbought, but it has recently crossed below 50, suggesting a potential short-term bearish momentum. The Bollinger Bands have been widening, indicating increased volatility, and the price is currently near the lower band, which could signal a potential bounce. Considering these factors, I recommend a long position with an entry price of $0.415. A stop loss should be set at $0.368, aligning with the established support level, to limit potential losses. The initial target price is $0.435, aiming to capture a rebound towards the middle of the Bollinger Bands. To refine this strategy, I'll incorporate RSI signals. If the RSI drops below 20, indicating an oversold condition, we'll hold the long position. If the RSI rises above 80, suggesting an overbought condition, we'll consider taking profits or tightening the stop loss. The forecast data suggests a price increase to $0.435, further supporting the long position. This combined approach, utilizing both Bollinger Bands and RSI, creates a robust strategy for capitalizing on short-term price movements while managing risk effectively. Based on the historical data and forecast, Sui shows a fluctuating trend with periods of consolidation. The RSI consistently stays above 50, indicating a generally bullish momentum, although it dipped below 50 on several days, suggesting potential short-term weakness. The Bollinger Bands show that the price has been oscillating within the bands, with the recent price nearing the lower band, suggesting a potential bounce. The forecast for the next week indicates a slight downward trend, with prices hovering around $3.6. Considering these factors, I propose a moderately bullish strategy with a focus on capitalizing on potential rebounds. My strategy involves a buy position when the RSI falls below 45 and the price touches the support level of $3.49. The entry price will be $3.49. A stop-loss order will be placed just below the support level at $3.4 to limit potential losses. The initial target price will be set at the nearest resistance level of $3.72, offering a quick profit if the price bounces as predicted. If the price continues to move favorably, the target price will be adjusted to the upper Bollinger Band level of $4.31. This combined strategy leverages RSI for identifying potential oversold conditions, Bollinger Bands for gauging volatility and support/resistance levels for defining price targets, aiming for a high return investment with controlled risk. Based on the historical data and forecast, Kaia demonstrates a clear downtrend. The price has consistently moved below the Bollinger Band center, indicating bearish momentum. The RSI has been consistently below 60, further confirming the downtrend. The forecast data projects a continuation of this downward trend, with prices expected to fall to $0.137. Given this analysis, I recommend a short selling strategy. We will enter a short position when the price touches the support level of $0.138. The stop loss will be set at $0.147, just above the recent Bollinger Band's bottom, to protect against a potential false breakout. The target price will be $0.137, aligning with the forecasted price. To maximize returns and manage risk, we will implement a tiered exit strategy. Initially, we will take 50% of the position off the table when the price reaches $0.144. The remaining 50% will be held with a trailing stop loss set 1% above the current price, allowing us to capture additional gains if the downtrend continues. This approach combines a defined profit target with a dynamic risk management element. This strategy will yield a high return with a low-risk profile. The initial short position entry price will be $0.138, stop loss at $0.147, and the first target at $0.144. The second target will be $0.137 with a trailing stop loss. Based on the historical data and forecast, Ethereum has shown volatility with a recent upward trend, but the RSI reaching 86.0 indicates an overbought condition. The forecast for the next week suggests a potential downward correction. Considering this, I propose a short-term contrarian strategy. We will initiate a short position at $3,680. The stop loss will be set at $3,690 to protect against a potential rebound. The initial target price is $3,600, aiming to capitalize on the anticipated downward correction. If the price breaks through $3,600 and continues to decline, we can adjust the target price to $3,550. To refine this strategy, we will incorporate the Bollinger Bands. The center band is currently at $3,650, and the upper band is at $3,940. If the price touches the upper band, it reinforces the overbought signal. The lower band provides a dynamic support level. If the price falls below the lower band, it could indicate a stronger downward trend, prompting us to lower the stop loss to $3,640. This combined approach, leveraging RSI and Bollinger Bands, aims to maximize potential returns while managing risk effectively. Based on the historical data and forecast, DeXe shows a mixed trend, but with a recent upward momentum. The RSI has fluctuated between 35 and 54, indicating periods of both oversold and overbought conditions. The Bollinger Bands show the price recently bouncing off the lower band, suggesting a potential upward move. Considering these factors, I recommend a long position strategy. We will enter a long position at $7.31, coinciding with the first forecast price and a recent bounce from the lower Bollinger Band. The stop loss will be set at $7.25, just below the recent support level and the lowest price of the last 2 weeks. Our target price will be $7.5, aligning with the upper Bollinger Band and a reasonable profit target given the recent price action. To refine the strategy, we will incorporate the RSI indicator. If the RSI rises above 60, indicating overbought conditions, we will consider taking partial profits or tightening the stop loss. Conversely, if the RSI falls below 30, suggesting oversold conditions, we will reevaluate the position and consider holding or adding to the position. This dynamic approach, combining Bollinger Bands for trend confirmation and RSI for fine-tuning, should provide a balanced strategy for potentially high returns while managing risk effectively. The portfolio will prioritize this long position with a moderate allocation, allowing for flexibility to adjust based on real-time market conditions. Based on the historical data and forecast, Optimism demonstrates a volatile trend with periods of both upward and downward movement. The RSI consistently fluctuates above 50, indicating a generally bullish sentiment, but has recently dipped below 50, suggesting a potential pullback. Considering the forecast data, the price is expected to hover around 0.68 to 0.72 over the next week. I recommend a strategy that combines RSI and Bollinger Bands to capitalize on potential short-term movements. Specifically, I suggest initiating a long position when the RSI falls below 45 and the price touches the lower Bollinger Band. The entry price for this trade should be $0.632. Place a stop-loss order at $0.61, just below the lower Bollinger Band to protect against unexpected downside. The initial target price should be $0.703, aligning with the recent resistance level and the forecast price. If the price reaches this target, consider moving the stop-loss to break even to secure profits and potentially allow for further gains. This strategy aims to capture short-term upward movements while mitigating risk through strategic stop-loss placement. The portfolio will be 60% long position, 20% short position and 20% cash. Based on the historical data and forecast, Avalanche has shown a downtrend recently, with the RSI consistently below 80 and nearing the oversold territory. The forecast for the next week suggests continued downward pressure, with prices hovering around $22.6 to $23.3. Considering the strong support at $18.6 and the current RSI levels, a short-term contrarian strategy is advisable. We will implement a long position at $23, anticipating a potential bounce from the support level. The stop-loss will be placed at $18.6 to limit potential losses, and the target price will be set at $26.8, aligning with the upper Bollinger Band. To refine this strategy, we will incorporate the Bollinger Bands. When the price touches the lower band around $20.8, it signals a potential oversold condition, reinforcing our long entry at $23. The upper Bollinger Band at $26.8 will serve as our profit target. This combined RSI and Bollinger Bands approach offers a balanced risk-reward profile. The entry price is $23, the stop-loss is $18.6, and the target price is $26.8. This strategy combines the momentum indicator RSI with the volatility indicator Bollinger Bands for improved accuracy. Based on the historical data and forecast, Arweave exhibits a downtrend with increased volatility. The RSI consistently dips below 80, indicating a lack of overbought conditions, while frequently approaching and crossing below 30, signaling oversold periods. The Bollinger Bands show widening bands, reflecting this increased volatility. Considering the support price of $6.22 and the forecast data, I recommend a contrarian strategy focusing on buying during oversold conditions and selling during periods of consolidation near the support level. Specifically, I suggest a strategy where we buy Arweave at $6.67 when the RSI falls below 40. Place a stop-loss order at $6.22, just below the support level, to protect against a further decline. Set a target price of $7.18, aligning with the forecast for August 5, 2025. If the price reaches $7.18, take profit and consider re-entering on the next oversold signal. This approach leverages the anticipated bounce from the support level and the forecast price movement while mitigating risk with a strategically placed stop-loss. Based on the historical data and forecast, Raydium has been experiencing a downtrend, with the price fluctuating between a support of $2.17 and a resistance of $2.92. The RSI has been consistently above 50, indicating strengthening momentum, but recently dipped below 50, suggesting a potential reversal. The Bollinger Bands show that the price is currently near the lower band, indicating a potential oversold condition. Considering these factors, I recommend a long position with an entry price of $2.7 on August 11, 2025. The stop-loss should be set at $2.47 to protect against further downside risk, and the initial target price should be $2.85, aligning with the forecast and the middle Bollinger Band. To optimize returns, I propose a dynamic strategy incorporating RSI and Bollinger Bands. If the price reaches the target of $2.85, we will adjust the stop-loss to break even, securing initial investment. If the RSI falls below 30, indicating an oversold condition, we can consider a second entry at $2.72 with a stop-loss at $2.49 and a target price of $2.84. This layered approach allows us to capitalize on both trend reversals and potential bounces from support, maximizing profit potential while mitigating risk. This portfolio combines the strengths of both strategies for high returns. Based on the historical data and forecast, Uniswap exhibits a downtrend with a recent bounce. The RSI indicates that the asset is currently approaching oversold conditions, with a reading of 45.5 on August 4, 2025. The Bollinger Bands show that the price is near the lower band, suggesting a potential rebound. Therefore, I recommend a contrarian strategy focusing on short-term gains. I suggest entering a long position at $9.78 with a stop-loss order set at $9.34. The initial target price should be $10.3, aiming to capitalize on the potential bounce from the oversold level and the lower Bollinger Band. To refine this strategy, I propose a tiered target approach. If the price reaches $10.3, consider moving the stop-loss to the entry price of $9.78 to protect profits. If the price continues to rise, a secondary target of $10.6 can be set. This tiered approach allows for flexibility and maximizes potential returns while managing risk. The overall strategy combines RSI oversold signals, Bollinger Band support, and a well-defined risk-reward ratio to generate high returns. Based on the historical data and forecast, SE exhibits a downtrend, consistently testing the support price of $0.27. The RSI indicates oversold conditions, fluctuating between 36.7 and 65.3. The Bollinger Bands show that the price has been trading within a contracting range recently, suggesting a potential for a breakout. Considering the forecast for the next week, with prices ranging from $0.307 to $0.299, a conservative strategy is recommended. I propose a contrarian strategy, anticipating a bounce from the support level. The entry price will be $0.293, coinciding with a recent dip and oversold RSI. The stop-loss will be set at $0.284, just below the recent low, to limit potential losses. The initial target price will be $0.304, aligning with the recent resistance level and the forecast range. If the price reaches $0.304, we will move the stop-loss to the entry price $0.293 to secure profits and potentially target $0.312, the previous resistance level. This strategy combines RSI oversold signals, Bollinger Bands contraction, and support/resistance levels to maximize potential returns while managing risk. Based on the historical data and forecast, Litecoin shows a generally upward trend, although with some volatility. The RSI consistently crossed above 70, indicating overbought conditions, but the price continued to rise, suggesting strong buying pressure. The Bollinger Bands have been expanding, indicating increased volatility, and the price has recently approached the upper band, further supporting a bullish outlook. Considering the forecast for the next week, with prices projected to reach $125, I recommend a long position. The entry price should be $117, with a stop-loss placed at $114, just below the support level, to protect against a potential reversal. A target price of $125 would provide a substantial profit if the forecast holds true. To refine this strategy, I'll incorporate the RSI and Bollinger Band signals. When the RSI dips below 50, it suggests a potential buying opportunity. The strategy will be a combination of trend following and momentum trading. If the RSI falls below 50, enter a long position at $116, with a stop-loss at $114. If the price touches the lower Bollinger Band, enter a long position at $117, with a stop-loss at $114. The target price for both scenarios will be $123. This blended approach aims to capitalize on both the overall upward trend and short-term momentum signals, maximizing potential returns while managing risk effectively.